Okay, good afternoon, everybody. Welcome to Monday Market Update number 167 for Monday, 16th of December 2024. Our last one of 2024. Where did that year disappear? But I think that's just a factor of getting older. But anyway, great to have you all here. You're all very welcome. Just those of you joining us for the live session, if you can just confirm that you can see the slides and hear my voice, I'd really appreciate that. Have the technology working in our favour rather than against us would be a good start for us all. Super. Thank you, guys. Much appreciated. As always, Monday Market Update is literally just that. It is me racing through as much as I can squeeze in the next 30 minutes, looking at strength and weakness within FX and indices and commodities markets, looking at a few charts of interest that might be of interest to yourself that you want to add to your watch list, and then a look at the live markets. It is not a signal service. It's not a trade recommendation service. It is purely me sharing what I'm looking at, which might be of relevance or of interest to yourself. As always, you're very welcome here. Just remember that you're always responsible for your own trading decisions. For those of you who don't know as yet, the VTP Stage 1 online is now free for everybody. You can understand the reasons why if you go and have a look at the page. You can see it on the QR code there or on a bit.ly /VTP free, and you can engage that. Okay, a little something for you to work through during that Christmas break. And as always, if you need something else to do through that Christmas break, you are very welcome to listen to the Togs Trading podcast. Okay, the last one for this year went up last week. You can find it at togspod.com or on bit.ly at Togsweb or on the QR code there. Okay, you can follow our podcasts. All right, you can also access Ian's Trader blog and also recordings of my Monday Market Update. And as always, you're very welcome. And if you want a little bit more education, this afternoon, 2 o'clock, London time, active trades. I do a webinar for them called Monday Market Matters. This week's the educational element will all be about how to make the most of the daily charts. And if you wish to join us, you can either register on their website or once again use that QR code to take you there. Okay, enough of all of that. Let's dig into what we're here for, which is about understanding the strength and weakness within FX indices and commodities markets. So if you're new to trading or if you're joining us for the first time, this is just some excerpts from my own model that I spend my weekends working on. Okay, I'm looking to identify the strength, trend, and momentum within FX indices and commodities market because by doing so, it helps me allocate my time, energy, and resources better for the week ahead. I have plugins that can do this for me, but I still prefer to do it by hand because I find that it's best practice for me, gets me connected to the market, gets my head in the game, gets me ready for the week ahead. And I also identify opportunities better when I do it by hand. So I do it by hand at the weekend, and then I use the plugin just to check as I go through the week that whether anything's major changed. So what's it telling us? Where are we? Okay, we are into week 51 of the year. Okay, last but one full week of the year for 16th of December. Where's the strength? Where's the weakness? Probably not a massive shock to see that US dollar has kind of regained its place at top of the pile, even with some of the news that's come out. Okay, dollar's still just it's holding up for the moment, and that came at the expense of Japanese yen that has basically drifted its way lower. Now, interestingly, of course, last week was a very busy week news-wise. This week is a very busy week news-wise. We started off this morning with some of the flash PMIs for manufacturing and services. And what we saw was for both, basically for for France, UK, and Germany, the manufacturing side of the PMIs, they all fell, but the services rose and stuff. So make of that what you will. How does that really impact upon what we're looking at? Well, sterling has basically risen its way back up to the sort of into the sort of top two of the pile. Is that because of fantastic news out of the UK? Not really. It's more about how the Europeans cut interest rates by 0.25%. The Swiss cut interest rates by 0.5%. That was they sort of fired the bazooka that people perhaps maybe weren't expecting. The Canadians cut interest rates. The Aussies held theirs, but there's a kind of dovish stance going on with that. Okay, and then of course this week we have on Wednesday night we have FOMC statement, and people are expecting expecting a 0.25% interest rate cut from the Americans. And then we have on Thursday, we have the MPC, okay, the monetary policy statement. Okay, at the moment, people are expecting the UK to hold fire at the moment, but we will wait and see. But that's kind of been reflected in the STAM, the Aussie and the Kiwi, and and the Condols really. They all, as like last week, they still remain at the bottom of the pile. Okay, and certainly in Kiwi and Aussie got a bit of a battering. Interestingly, and we're going to take a quick look at them. Despite Euro lowering, okay, and falling on Thursday, it actually has had a little bit of a rally since then. Swiss franc has kind of been playing around a bit as well, and we'll have a little quick look at them. So. Sterling has risen, but as I've said all along, more due to the weakness of others, more so than any real joy in sterling, and that carried on this morning, as you can see. Okay, as we've gone on through our particular session, and the Japanese yen has kind of, continued to drop down. Once again, I should have mentioned actually also Thursday we're expecting Japanese their Bank of Japan statement as well. Okay, and it's kind of a little bit mixed. Some people think they're going to raise rates. Some people think they're going to do nothing. I suspect we will. I suspect they'll do nothing. So of course, if they do raise rates, that will be the big difference. That will be the thing that puts the cat amongst the pigeons. And it's kind of interesting. You've got Wednesday night, you've got FOMC. Thursday morning, you've got Bank of Japan, and then of course Bank of England on Thursday lunchtime. It does not surprise me the Japanese are doing it sort of, within 12 hours or so of the American statement. I think there's more going on there than meets the eye, but that just might be me being a bit of a cynical old bugger. But anyway, we shall wait and see what goes on. When we look at indices and commodities, kind of interesting week. Okay, price action is there has been a little bit of divergence. Okay, certainly last week, we were seeing Dow and the Russell sort of come off. We talked about it. They weren't following through in the same way the S&P and the Nasdaq were. Right, we can see that S&P is back to strategic bullish. DAX and the FTSE, okay, are both strategic bulls. But as you hear me talking about it all the time, right, the FTSE is a bit of a laggard, and we'll probably talk a little bit more about that tonight. Tonight will be the VTP stage 1 call, the last call of the year. Tomorrow will be the stage 2 call. So for those of you watching this who are members of the VTP, by all means you can join them, or there'll be the recordings. If we look across the oil, which has been a strategic short, that has started to change a bit. Gold and silver, okay, still remain tactical shorts, and we'll have a little look at the charts there in a moment. The VIX remains bullish for indexes, and Bitcoin, okay, still remains a strategic buy. And I see it was nudging 106, okay, this morning. So we can watch and see what the score is there with that. Okay, as we have a little look at the chart in a moment. Okay, so just bear me a second. So that's what we're looking at the moment. So why don't we have a little look at some charts of interest, a few that's in. What did I put in today? Right. Okay. So here we go. First chart of interest for the day, Nvidia. All right. I just figured, as it's the last one for the year, we might have a look at the one that's kind of has basically, in terms of stocks, certainly in the stocks in the West has been, it's been the kind of, let's say, the hub of all interest and news and media. And this is the daily chart. I mean, I normally put the weekly charts, okay, but this is the daily chart, and you can see, the kind of terrific run that it's had for the vast majority of 2024. Okay. The interesting thing, one of the reasons I put this in is because it's it's the big boy, and actually it makes up such a huge percentage of the American indexes in terms of the capitalization. But I read an interesting thing at the weekend. If you removed Nvidia from the American indexes have not performed significantly better than the European indexes this year. Now, lots of people, myself included, have given Europe a bit of stick about the economic and political nonsense that's been going on there. Okay, especially in the two main ones, France and Germany. But I was a bit alarmed to hear that basically strip out Nvidia, and the American stock markets haven't been as haven't been as rosy as we like to think compared to the European ones and stuff. And so I wonder whether that presents us with opportunity going into 2025. Certainly, when I look at this at the moment, despite the dominant trend still being bullish on terms of both Nvidia and AI, I'm curious and I'm interested here. Okay, I'm interested here. Okay, for me, I start to look at this. Well, do you know what? We've cleared the recent last highs. All right, is this actually a form of a head and shoulders pattern with the right shoulder being a very nice evening star formation, and around about here, around about $135 being the bit of the neckline. Where we are underneath the 50, only for a couple of days, okay, and we have been beneath it before and launched our sail way back up it. But I'll be interested to see, does that neckline hold, okay? Because if it doesn't, well, I wonder whether, really sort of down towards 120 becomes a possible scenario. So, I'm just watching that, all right? I know everyone's looking for the Santa rally and looking for it to lift stocks, but, whilst the dominant trend is still very long, and as I said, on Nvidia and AI, tactically, I would be getting teased and getting ready for a little bit of a, it's a boxer's jab, okay, rather than a knockout blow and stuff. But that's what I'm just looking on there on video at the moment. Next, this is CCL. This is Carnival. All right. Okay. So I was intrigued by this because one of my good friends has just spent the last 30 days on a cruise. One of my other really good friends has just come back from a cruise around the Mediterranean. Two guys who, in their youth, had always promised me that they would never ever be seen dead on a cruise liner. Have both got into their 50s and 60s and suddenly have joined the cruise liner brigade and stuff. And fair play to them, they enjoyed themselves. I'm just taking the mick out of them. But clearly, I'm interested to see, well, if people like that are coming back or getting onto the cruise line gig. Well, what does that say? Okay, and on Friday we have Carnival will be they've got their earnings, so this is a good chance for us to have a little look at it. This is the monthly chart, all right. So some of you might remember, okay, go far back that we had already peaked. Look at here, up $70 way, okay, and then we were already in a bit of a downtrend, and then basically the COVID just absolutely collapsed and clattered us to around about $8. Okay, we went from in a year a high of above 70, okay, to $8. That was quite some collapse there. And as you can see, we had a bit of a sort of dead cat bounce, but then we came back towards that area. There's always people who tell me that support resistance doesn't work, it's of no relevance or interest. If you're looking at trading on the 1 minute chart, well then support resistance doesn't hold that often. But when you're looking at monthly charts, okay, big levels like this, they get noticed, all right? They get noticed, they get seen. There are huge amounts of orders at those significant levels, and that becomes an opportunity. And as you can see, and it looks even better on the weekly chart, we came back down to that $8 there, okay, middle of last year. We performed a nice inverse head and shoulders on the weekly chart, and actually, do you know what? We've just been grinding our way up here. There is, for those of you on VTB, there is a monthly PO20 going on there. We're above the 50, and we're working our way up and stuff. And so I'll be intrigued to see, does the news on Friday, is that enough, okay, to nudge us towards $30 where we have had resistance before, or does it literally take the wind out of the sails? Not that any of those cruise ships have sails these days, but you get the meaning. So that has been kind of an interesting. I think that's kind of been an interesting sort of recovery story, and I'm intrigued to see whether the earnings on Friday will make sure that continues. So as I said, might be one you want to add to your watch list. Okay, someone else who is releasing their earnings this week is FedEx. I think they're Thursday. I think we've got FedEx Thursday, Carnival Friday. But yeah, FedEx is Thursday. Okay, if I'm out by there, I apologise, but this is just about a chart of interest. All right, so FedEx. Okay, most of you'll know who FedEx are and what they do. This is the weekly chart, and as I said, I'm always fascinated by by charts. This, regardless of what you might trade, there's always something you can learn from charts. There's always something you can see see or something you can practice with or spot opportunities. And when I look at this, my first thing is I'm intrigued is about, $300 has clearly been a significant level of resistance, hasn't it? Clearly been a significant level of resistance. We're currently trading at what's about 283, 284. And what I'm intrigued on the other side is, of course, 200 was a big round number. Okay, there was support there. Okay, we can see that. But intrigued, I'm also intrigued at how the kind of the weekly 50. All right, every time it's got beneath the weekly 50, it has run its way up there, hasn't it? And so, excuse my artistry. Some might say there's an ascending triangle. Some might say that is just basically a bullish channel working its way up. Either way, we're in the middle of it. And I'm going to be curious to see, in the present world, and in terms of the state of the world and the state of inflation, etc. What impacts that has had on a transport logistics company like FedEx. We're in the middle of that range. Is there, once again, a bit like Carnival, will the earnings be good enough to pump us back to 300, or does it basically pull the rug and we drift our way down to 270 off the back of it? We're in an interesting space there. Okay, so as I said, just might be a chart of interest that you want to add to your watch list to see how that particularly plays out. And finally, these guys, Nike Corporation, they're also reporting on. I think it's Thursday again, yeah, off the top of my head. Here we go. Weekly chart. What do we see? What's of interest to me is that, once again, a little bit like Carnival, all right, in the sense of, we were at, look at that, highs of $180 there, okay? We false break out those highs, okay, and we break the lows of it. And then you can see from $180, we have, drifted our way down, okay, slowly but surely. Now I would be saying that, we are in a kind of a descending triangle, big weekly descending triangle, 80 being the base, but you can see we have kind of broken through there. We have broken through it, and whoops, excuse my drawing. We just basically we had a little bit of a bounce of it, but we've fallen down again. The kind of thing that perhaps might interest me is that once again, these guys are reporting at the moment that okay, I see that as that's a higher low. All right. Now, one swallow doesn't make a summer. One higher low doesn't mean that the whole thing's completely reversed. I think personally, if we start to flip the 20 and get above the 80, well then I look at us going towards 86, 87, where the 50 is, and then if it flips the 50, well then 100, big round number 100 starts to look of interest to us. Okay. So that's what I'll be looking for on the bullish scenario of that, and then that might well be backed by the results later this week, or once again, as I said, maybe the results are a bit of a rug pull. Everyone's going to be interested in these big American companies to see what state they're in as a reflection of the kind of economy that Trump is likely to be inheriting. So, as I said, it's a chart of interest you might want to add and watch and see how it plays out later this week after the news results, if the earnings results are released. Okay, so there you go. There's some charts of interest. Let's switch across to the live charts now. So just bear with me 1 second, and we'll switch across. Okay, so I'm hoping you can still hear me. I'm hoping you can see me, or rather at least see the charts. This is just one of my indices profiles here. Okay, so Dow, Nasdaq, S&P 500, Russell, oil, West Texas, okay, DAX, Nikkei, and FTSE, okay. So as you heard me say the last few weeks, those American indexes, they remain all right. They remain. The dominant trend is a bullish trend. Okay, that's I don't have any say with that. As I say, for new traders, don't be trying to fight that. But a little bit like what we said last week. I said last week is that here we go. The Russell was reversing, and if you look at last week, we had a bit of a sell off there. Dow was pausing. We had a bit of a sell off there. Nasdaq continued. Okay, pushed up. S&P kind of went sideways. So, whereas they were all on a charge about a month or so ago after the election, they were all on a charge together. There's a little bit of divergence creeping in there, isn't it? Dow and Russell are taking a breather. Nasdaq is finally now caught up and gone beyond. And the S&P 500 is pausing. Okay, so as I said, the dominant trend is still long, but there is a little bit of divergence there, and And then within that divergence, there will be shorter term tactical opportunities, but strategic wise, okay, I'm not. It's not. It's not time to man the boats, all right, or anything like that at the moment. Okay, it's we're just intrigued to see how is that particularly how is that playing out and how's that going to follow through. And certainly, if we look at like this is the Dow on the daily chart. The down the daily chart. I think we talked about last. This was a beautiful bounce. Okay, nice pullback, bounce off the 20 period moving average. Moved up lovely, and then we double topped here. And then you can look at that. Just look at the daily price action there. Boom, 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 boom. Everybody's been looking for that Santa rally. Well, Santa's sleigh has been shot down there, hasn't it? It's kind of drifting its way back down to the 50. That's not to say we can't have a punch, but it would not surprise me if there's just lots of people taking just booking profits, all right, towards the end of the year. Make sure they get a nice bonus in January. Make sure they can just basically sort of take their eye off the ball over those last couple of weeks, Christmas. That's what we're dealing with there, okay, on the Dow. Whereas the Nasdaq. Okay, the Nasdaq is just grinding its way. Okay, grinding its way. That's still making higher highs, higher lows. So there is, as I said, you can see there's divergence there. Okay, there's divergence building in. So I always want to take note of that. Um, Nikkei. Nikkei, we talked about this. This is the Nikkei of the weekly. It was coiling up. I was it's my natural bearish side was sort of looking at this as being a possible, head and shoulders pattern. As I said, I think, or maybe one of the VTB calls is that there's still a lot of support. These 50s, there's a lot of support, and what we have done is we've broken out of that kind of that coil all right to the north side. Now, as I said, we've got the likely Japanese rate decision on Thursday morning. That could change all of that. So I wouldn't be getting long at this moment, but I would definitely be intrigued to see, what comes out of Bank of Japan later this week. And then DAX, yeah, we talked about that. DAX is weekly, and just you can see, just pumped its way. But last week, that's a bit indecision, isn't it? There's a little bit of a doji. You might call that a spinning top. Okay, but it's indecision, especially after the week we'd had the week before. So is it once a case, everybody's just sort of said, you know what, I'm just going to bank some profits. This has been a great year in the DAX. I'm going to bank some profits. I'm going to kick back. All right, put on my lederhosen, have some apple schnitzel, down one too many apple corns, and just enjoy the last couple of weeks of the year. And you know what? If you'd been long DAX for the year, well, who could blame you? All right, who could blame you? Nobody saw it as such a strong move as that. But that's where we find ourselves. And as I said, when we go closer to home, well, then we're looking at the laggard of the FTSE. And once again, as you've heard me banging on about for most of this year, we remain in that kind of range between 8,100 and 8,400. Last couple of weeks we've got up there, but we've got wicks to the north there, haven't we? Wicks to the north. Now the 50 is working up, and I wonder, are we going to get a squeeze? Okay, going into the start of next year, are we going to get a squeeze going? That basically, here we go. That's just drawing some kind of bang. Are we going to get a little bit of a coil going up, a squeeze that is just basically going to sort of, work our way towards and then pop our way out of in the first part of 2025? Very possible. Which way would it go? Bullish or bearish? Well, as I said, my natural inclination is to be a bear, especially when I've seen price rolling up, especially when I see nothing really particularly good coming out of the, let's say, the political and economic situation in the UK. But the reality is the market's going to want, the smart way to play it is to want what the market wants. So, if it's going to coil, I'll just watch it, work its way up there. Quick look at some of the commodities. Gold, I'm intrigued because, having peaked here, we've fallen back. And, at the moment, last week, that's a lower high. All right. I see that as a lower high. Now, of course, this week's candle will either confirm or deny that. All right. But I'm intrigued when that is a ski jump. All right. When I see things like that, daily chart is not as much joy. Remember, we had talked about how dollar and dollar sideways price action had played its way out in at the time Bitcoin and oil and gold, and we popped out of it. But you can see we've come right back into it, haven't we? It's the price action that last month or so for gold hasn't been easy. Everybody loved this when you had a nice daily trend, beautiful. Everybody loves this. It's easy to make money when it's like this. But once you start going sideways, and to me, this is a market in transition. It's one of the phases. All right, it's in transition. So I pull my reins in when I see price like that. If we look at silver as well, bang, silver, I'm intrigued here. We've talked about how this is the weekly 30 is held up as support, but now, we're pushing up, we're caught in that. I said that, I needed to get above the 50, and we did. And then, as you can see, bang, big bearish engulfing candle, key reversal candle. So now I see us back to 30. That's where I see us probably heading back over for the remainder of the year here. Bitcoin, look at that. Oops. Bitcoin weekly chart. There's lots of weekly support there. There's lots of weekly support there, and it's pushing its way up there. And how high had it traded there? 106. So they've lost about $3,000, but you're losing $3,000 a day, and Bitcoin is it's no big thing there. On the daily chart, I thought we were coiling up. We had a big, washout here, but the 20 is still holding as support. All right, 20 is still holding as support. All right, let's. We might overrun a little bit. This is the last one of the year and stuff, but let's have a little look at the dollar and a couple of currencies. Excuse me, slow. All right, so hopefully you can still see me. Now we're on to my dollar profile here. Okay, so what are we seeing here? You've got Aussie dollar, Euro dollar, cable, dollar Swiss, Kiwi dollar, dollar Canadian, dollar yen, dollar index. That's that's where we look at as usual. If I'm looking at FX, I want to start with the dollar index. Okay, that's my place. Weekly chart. Oh, sorry, no apologies. 4-hour chart. Weekly chart. Bosh. Off we went. We came back a bit, but oops. I need to. We're starting to move our way. All right, starting to move our way there, and this one hasn't been. I need to update on this boy. Come on. This is what happens when you have so many. Here we go. This is what happens when you have so many charts on across so many different computers. There we go. There we go. Bang. If we go down to the daily chart, as I said, we'd gone sideways for a bit, but you can see in the same way that Dow, remember that Dow daily chart had kind of dropped. Well, we've had climbs on the dollar. All right, okay, probably a little bit of a doji, but we're still climbing. That's to me, that is still bullish, all right? That's still bullish dollar. Now, of course, FOMC might change that, but when I look at how is that affecting the other currencies, that strength, okay, that strength within the dollar, it's still being supported elsewhere, right? Still being supported elsewhere, okay. So what I mean by that is Bush, Aussie dollar, okay, still in a downtrend. Kiwi dollar still in a downtrend. Dollar CAD still in that uptrend. Euro dollar still in a downtrend. Dollar against yen uptrend. Cable, well, cable's just dancing around, but that's just cable. Dollar against Swiss franc. Dollar is remaining strong there. So that's what we're seeing. All right, that's what we're seeing. We're just seeing that dollar strength remains. Is this the pump before a dump on the FOMC? Possibly, maybe a pump before a profit take. Okay, but as I said, just this is a week. With that, trying to that is a week to sort of basically keep your powder dry and wait for the best trading opportunity. Okay, so what else have we got here? This is euro, all right, euro. Okay, so of course we had the interest rate cut, and we just said euro still remains in a downtrend against the dollar. I'd say 105 is holding a support there. Excuse my drawing, but you can see that. But interestingly, all right, even though we've had an interest rate cut, what we can see is euro yen was in a downtrend, but actually, gosh, it has actually pumped its way up. Look at this, euro against Swiss franc, all right. This was an interesting flush here in hindsight, but you can see, bang. So the Europeans lowered or cut interest rates by 0.25%. Swiss cut by 0.5%. So we've had a bit of a reaction there. Even euro against sterling, all right, euro against sterling there. You can see that actually, despite them cutting, we've actually had a little bit of a bump so far, which even euro against New Zealand dollar, well, they're weak. Euro against Canadian dollar, it's been a little bit. It's been a little bit of sort of kind of, I would say, pivoting because they've both been cutting. Euro against Australia going sideways. So you would have expected, with cuts of interest rates to have, really, really, prices dropped. But an awful lot of it's already been baked in. I think the fact they went for a 0.25% rather than 0.5% is basically probably signaling to the market that things aren't great, but they're not as desperate as perhaps maybe people were thinking. And maybe people are looking forward to New Year, where there's probably going to be a new German government, okay, within a couple of months, and then maybe France will get itself sorted out. But we'll see about that. We'll see about that. So there we go. That was the French. Let's or the Europeans. Let's finish off with sterling. Okay, I don't want to overrun too much for today. So let's have a look at sterling. Okay, so what have I got here? As always, I've got a profile here, cable, euro sterling, pound Aussie, pound CAD, pound New Zealand, pound Swiss, pound yen, and the FTSE. All right, FTSE we've already spoken about. Let's have a look at the main one, pound against dollar cable. We spoke about last couple of weeks about how we'd had a bit of a drift up, right? As the Americans went off for Thanksgiving, we had a bit of a dollar weakness, sterling drift, but that has flipped, hasn't it? To me, that you could look at that as an evening star formation, which is bearish. All right, so look at that as evening star. I've been looking here to see sporting trend line that broke, and boy did it break. We coiled up, it broke with a big bearish engulfing candle. All right, and we've started to drift down again. All right, so as I said, sterling is moved to the second in the stand, but it's because of the weakness of others more so than inherent strength in sterling. You can see there over the last couple of days that's just literally collapsed there, hasn't it? The 4-hour 200 period moving average was acting as really nice dynamic resistance. See how it was acting as dynamic resistance? Every time it was coming up to there, it just dropped, and you can see, bang, it just couldn't get long. So if it can't go long, bang, we broke that trend line and off we went. All right, so that's how we're looking there. Of course, a little bit of strength against the yen because the yen is just basically the last couple of weeks that in the same way we had an evening star on the pound against the dollar, I would look at that as a morning star on the pound against the Japanese yen there. And if we look at that, that is just working its way up. Look at where we are. We're just underneath the 50, the 200, all right? And on Thursday, we've got both the Bank of Japan and the Bank of England, interesting, right? And there's a lot of actually UK data coming out this week, all right? You've got jobs tomorrow. Then you've got Wednesday, we've got CPI. Thursday, we've got monetary policy. And then Friday, we've got retail sales. So this is going to be an interesting week for sterling. Does it basically maintain its dignity, okay, with some good numbers this week for the end of the year into 2025, or is the petticoat lifted and we're seeing that there's nothing there, all right? There's absolutely nothing there, and the numbers start to roll and fall away. So it is going to be an interesting week there. But look, pound against yen, it's underneath the 50 and the 200 and supported by the 20. That's a coil of itself going on. If we look at pound against Swiss franc, okay, this is the weekly chart. You see how it's still coiling up. You've heard me talking about this for weeks now, haven't you? I thought we might get a break and a false reversal, but we haven't. We tried to break and then we came back inside it. The daily chart, bang, that was the work off the Swiss rate. Okay, they dumped it, and yet we still managed to basically sterling lose something against the Swiss franc. What's that telling you? When the S&P cut by 0.5%, and actually it strengthens against the sterling. What is that really telling you about what's going on there? So that you can see the data there. This is just it's just continuing to coil up, right? So let's see what the UK data does. Is it strong and it pumps it to 115? We shall wait and see. On the other flip side, okay, finish off with euro against sterling. Euro against sterling has been, the last couple of months even though it's been in a downtrend, it's not been the easiest to trade. Okay, for a short-term swing trader, not easy, but we've coiled its way up. But even though the Europeans cut interest rates last week, look how it ended the week. That is a bullish key reversal. It's also a bullish engulfing candle. It's a bullish pin bar. It's a price action combination. At the end of the week, at this kind of 83 level. All right, at this 83 level. So it's not to be sniffed at. It doesn't mean that we're immediately just short pound and long euro, but take this on board, all right? Notice this, okay? Was this off the back of news, a bit of a flush to the lows, profit release on news, and then are we likely to see a bit of a move? Look at that. Once again, on the daily, it needs to get above the 50, doesn't it? Look at the daily 50. It pumps up, tries to get above it, gets pumped down, gets back up to it, gets pushed down, gets back up to it, gets pushed down. We're back up to it now. Is it got enough to get above it, which is what it has to do, and up to the 200 to convince me there's real strength there? Or does the 50 act as dynamic resistance again? That's worth watching over the next week or so. Okay, ladies and gentlemen, let us draw a close to there. I appreciate we overran a little bit, but as I said, I'm always trying to fit in as much as I possibly can to share with you. I hope you found that useful. I hope that's given you a bit of insight. It is a big, busy week, all right? It's a big, busy week. And then by the end of this week, everyone will be bored and then they'll be into Christmas next week, okay? So, as I said, this is the final session of 2024 here. I just wanted to say to everybody, thanks to everybody who's joined us throughout the year. I really appreciate all the feedback, okay, the insights, the comments. It's really, really good. I am going to try next year to see maybe I can switch from doing it on Zoom through to maybe doing it on YouTube. Every time I've tried to do it, though, it's not interested in doing that. So if any of you have any technical ability about doing that, then please get in touch. I'd be delighted to hear from you. For those in the VTP, there'll be the stage one call tonight, stage two call tomorrow, okay, the end. For everybody else, listen, it's going to be a busy week. I hope you keep your powder dry, wait for the good opportunities, manage risk as always. And I hope you have a fabulous end to 2024. Spend a bit of time preparing for 2025, which I think is going to be a bit of a wild ride. But and that means there will be both threats and opportunity. And it's up to you to educate yourself enough to basically turn it from a threat into an opportunity. Take care, everybody. Have a great Christmas. And I look forward to speaking to you soon. Many thanks.